Good afternoon, Alain. For our viewers, I'm here with Alain Godard, who's Chairman and Managing Director of the European Fund for Digital Sovereignty. Now, Alain, before I ask you some questions, please enlighten us on what the role of the European Fund for Digital Sovereignty is.
The role of this fund is about investing into our tech champions in Europe. And the fund which will be created will be about 5 to 10 billions, investing into investment funds in Europe, about 15 to 20, in order for them to be able to accompany and finance our scale-up companies in Europe.
And you have the money comes from the European Union or member countries specifically, or?
This is a pan-European initiative called European Tech Champion Initiatives.
Okay.
And this initiative will collect money from a certain number of countries, so it's a pan-European in the sense of not being European, but a certain number of countries will contribute to these initiatives and would lead to a fundraising of public money and private money, all together 5 and 5, 10 billions ultimately.
So that you can catch up with Silicon Valley, basically.
This is the idea indeed. I mean, we don't have a market for the growth segment, and therefore 3/4 of our startup or scale-up companies, as we call them, are actually looking for financing abroad, outside Europe, outside EU, and therefore we want to give an alternative to the non-European funds to our companies operating in Europe and from Europe.
Okay. So that explains why you are the perfect person to speak about VC in Europe. And the question I think you discussed on the panel, one of them was what drives VC companies that are at late stage to seek funds outside of Europe? Is it because there are not enough people like you?
Indeed, there's not enough funds, VC funds, that are able to operate at large scale. This is precisely the problem. If you count in the US, for example, you have about 40 funds, VC funds in the growth segment of an average size of 2 billions. In Europe, we have 3 of an average size of 1 billion.
Okay.
So you can deduct from these statistics that there's indeed a market gap in Europe.
So what can Europe then do to keep these local champions local? Is it the fund? Is that yes, but is there beyond that?
Financing is an issue, indeed, but it's not the only one. What we are missing, in Europe, or need to improve, is our market integration. We talk about capital market union, and therefore we need to make progress also in that terms. There's always good and bad reasons for a startup to move from Europe to non-European geographies. The good reasons may be that they want to develop their business and industrialize their business abroad, and the US market, for example, is very good for that. The bad reason is when you are missing financing to develop from Europe. And this is about this initiative, which is to provide financing to these companies to develop from Europe at a global scale.
And what role does industrial sovereignty play? And are there different roles across different sectors, or is it more unique?
This initiative will not exclude any sector. Obviously, you can see from the recent crisis and I would say the geopolitical environment that certain sectors may be more important than before. Energy, for example, health after the COVID crisis, and therefore there may be more, let's say, attention or focus on these particular sectors. Space, for example, is another one. But there's no exclusion from this initiative. What we want is really to build new tech champions that would be able to operate worldwide, but build their initiative from Europe.
Venture capital in general in Europe, what are they doing to support you? And is it enough? Could they do more? What could they do differently?
I think indeed, I mean, it's already good that they start to position themselves as bigger player and global player, because I think it is extremely important to have global player at the level of the startups, the entrepreneurs, the one who innovate, but it's equally important to have global players at the level of the funds in order to accompany these firms in their, let's say, global development.
Yes.
And so I think the VC market in Europe has understood that there's changes to be made. This is also true when it comes to providing support to the startups, maybe more specialized or more thematic support. And therefore, we can say today that we have numerous proposals from existing fund managers to build bigger funds, providing more added value to the startups, including in terms of resources, talent, and support for the startups to grow and potentially to go to IPO at one point.
Yes. So what do you think is going to happen in 23? Because, I mean, the years before VC, it was all very hot and there was lots of money flowing into it, and it's been a bit of a cooling down and valuations have changed. And how positive are you for 2023?
I'm relatively positive in the sense that I see 23 as a transition. I think, I mean, we have indeed noticed, I mean, the impact of 22, also not as material as we were expecting. I mean, when you look at the fundraising, we are decreasing by only 15%. So it is significant, but when you compare the level of 22 with the level of 2020, it is still a significant increase.
Yes.
So the trend is positive. I see still a lot of projects being from the early stage, seed, pre-seed, there, and a lot of entrepreneurs very excited and motivated to build their business, specifically in sectors whereby we know the response will come from innovation and like energy, for example, or energy efficiency. Therefore, I'm not pessimistic from that point of view. I think there would be a transition in 23, whereby some adjustment will be made. I mean, you mentioned valuation, clearly. So there would be some wait and see attitude, certainly, from the startups, the entrepreneurs, but also from the fund managers, which may lead by the end of the year and in the perspective of 24 to a, let's say, a better environment, including from investors who may be more selective in the next few months, which is not necessarily a bad thing to be selective, more selective. And therefore, I'm expecting, again, by the end of this year, next year, to go back to a normal growth as we have seen before.
Thank you. That was very insightful. And you are obviously quietly optimistic, so I think that's a good signal for everybody.
Thank you very much. Thank you.